All right, let's dig into some earnings movers. For more on AMC and meme stocks, we're joined now by Tiffany McGhee, CEO and Chief Investment Officer of Pivotal Advisors, as well as a CNBC contributor. And for a look at the broader markets, we've got Andrew Slimmon, the Senior Portfolio Manager at Morgan Stanley Investment Management. Good to have you both. Tiffany, I'm going to ask you about AMC. I don't know if you even care about this stock, but certainly this is signaling the fact that we're talking about it, the fact that it's being paid attention to by quote unquote the institutions on Wall Street. Does it signify a change in how retail investors invest and also how they perceive risk in markets?
Yeah, that's actually a great question, Melissa. Good morning. So I don't know if it signifies a change in how retail investors are analyzing stocks like this. I hope not, right? So listen, we always talk on CNBC about fundamental analysis, technical analysis. I'm kind of old school Wall Street. That's how I would describe myself. And when we look at stocks, there's a lot of analysis that goes into these stocks. And it's a little bit scary to me, when you look at the fact that, AMC year to date is up over 1,400%, right? But then in the last month, it's down about, I think it was about 28%. This is like this roller coaster ride that is taking investors on. And I just, have a little bit of apprehension that retail investors, some of which are new, we all know how many retail investors got into the market last year, and I'm super excited about that people are taking interest in the stock market. But it's just a little bit concerning because, this meme party is all fun and games until it's not, right? Seems like some of these investors, you get in early, you're able to make some money, and people, get in to make money, and that's great. I'm so happy when average everyday people are making money in the stock market. But then so many people are also losing money. So it's just so important to have a strategy around stock selection.
Right.
So this worries me just a little bit.
Andrew, I want to get to the broader markets now. We've heard from two major banks and increasingly a growing chorus of economists who are expecting, and investors who are expecting the Fed to move up their taper timeline. Morgan Stanley saying we're going to get the announcement in December. Barclays saying that we're going to get the announcement in September. And I'm wondering what you think the impact on the bond market will be, and rates specifically. Rates can move independently of what the Fed does to rates. And so I'm wondering how you think we anticipate this sort of action.
Yeah. Good morning, Melissa. I think rates are going up. I mean, we had the rates peaked in late March and started heading down, and no one really understood exactly why. And then it turned out we had a COVID scare, a little bit of a growth scare. And now that's being validated by the reality of what's going on. And so I think now we're at a juncture where rates are starting to bottom as, it's apparent that there is a little bit of a COVID scare. But Dr. Gottlieb's point yesterday was excellent, that this is going to be short-lived. And I think the bond market will start to reflect that. And rates are moving higher. So to me, this is a classic example of kind of financial markets have anticipated economic data in advance, and I think rates are going up, and the tapering is all part of that story. And I expect rates to be higher just at year-end, just at a time when people seem to be more in the camp of rates are going to stay low for a while.
Is the corollary to that, Andrew, that financials will move higher, that tech, or particularly high-growth tech, will move lower?
Yes, exactly. So if you're a short-term trader, Melissa, and by the way, I love your show at night. Listen to it every night. I think that if you're looking for the best opportunities in the markets, it's that financials really have underperformed. The reopening stocks are down a lot, and yet I think that was a reversal from last spring, and I think that's where the opportunity set lies today. So if you're looking for fresh cash into the market, I would look at financials. I would look at reopening stocks. And what I find fascinating, this last point, is Bitcoin, cryptocurrencies, was the first risk asset to really roll over last spring. Right. And yet it's starting to recover now. So that's a risk asset. So I think that's a sign that you want to be looking at a little bit more of these riskier reopening stocks that are down a lot. This is a chance to re-enter those stocks.
Shepard Smith here. Thanks for watching CNBC on YouTube.